In this video, we cover some of the special provisions for depreciation. Since almost all of them deal with accelerating the deduction, this is a good section to know. The basic maker's depreciation we covered in the previous video serves as the baseline for cost recovery, but there are special provisions in the tax law that can lead to quicker depreciation. These provisions have been temporary, only to be extended again and again. The provisions we're going to look at include Section 179, immediate expensing, bonus depreciation, and something a bit less favorable, the auto depreciation limits. This should look familiar. This is Daniel in Toshland, whose job it was to show us that deducting the cost of something is generally better than capitalizing it. If this is true, then immediately deducting lowers the after-tax cost of purchasing the property, and in theory provides incentives for businesses to buy more, thus stimulating the economy. This stimulus is the origin of Section 179, which permits the immediate expensing of certain amounts of qualifying property placed in service during the year. The 2017 limit was $510,000. The 2018 limit is now $1 million. Thus, if Hobie Corp places furniture in service for $750,000 in 2018, that entire amount can be deducted under Section 179. Now, there'll be no future depreciation on the furniture since the entire cost was already deducted, and the adjusted basis is now zero. Section 179 is directed as a tax expenditure for small businesses. So, how does Section 179 limit its benefits to only small businesses? Well, a small business is going to be measured by the amount of qualifying Section 179 property placed in service. The 2017 threshold was $2,030,000. The 2018 threshold is $2.5 million. The amount is adjusted each year for inflation. To the extent the amount of qualified Section 179 property exceeds $2.5 million or $2.03 million in 2017, the Section 179 immediate expensing benefit doesn't evaporate. Instead, it is phased out dollar for dollar for the amount over the threshold. So if Hobie Corp places in service $2,650,000 of qualifying property in 2018, that amount exceeds the threshold by $150,000. Thus, Hobie may expense only $850,000 in 2018. You can see that Section 179 is a special benefit that lowers the after-tax cost of new qualifying property. But as a special benefit, it comes at the grace of the legislature. In order to curtail its abuse, Section 179 is not permitted to create a tax loss. Thus, a business will need to measure its income, including all deductions except 179, and that amount is the limit of the deduction. So if we revisit Hobie Corp and the $2.65 million of qualifying Section 179 property, and an eligible Section 179 amount of $850,000, except Hobie has taxable income before Section 179 of only $470,000. Then Hobie Corp's deduction is limited to $470,000. The excess eligible amount, if elected by Hobie, is carried forward. A couple of important notes on Section 179. It is elective and at the behest of the taxpayer each year. Section 179 can be elected for one asset, multiple assets, parts of an asset, or none at all. The annual limit is adjusted each year for inflation. So what qualifies as Section 179 property? Tangible personal property, computer software, and certain non-residential real property improvements. Section 179 property can be new or used and still qualify. Well, Section 179 used to be a very big deal for taxpayers, but times have changed. Over the past decade or so, a new way to expense property that would normally have been capitalized has been reintroduced. It was also around in the early 2000s, and it's called bonus depreciation. Bonus depreciation is automatic. That is, a taxpayer must elect out of bonus depreciation. Bonus depreciation is a super accelerated form of depreciation and is based on a percentage of the basis when the property is placed in service. You can see under the old tax law, it was 50% and slowly decreasing down to 0%. But that was the old world. The new law increases bonus depreciation to 100% starting September 28th of 2017, and it stays at 100% through the end of 2022. Then it starts its decline phase. This means that similar to Section 179, 100% of the basis can be deducted in the first year of depreciation. Any property with a recovery period of less than 20 years qualifies, and computer software also qualifies. Under the new rules, used property also qualifies. Thus, if Hobie Corp places the $2.65 million of furniture in service in 2018, using bonus depreciation, all $2.65 million is deducted. There is no phase out, and there is no income limit on bonus depreciation. So as you can imagine, taxpayers love to write off capitalized expenses. And similar to business expenses, sometimes there can be a mixed motive. And when there's a mixed motive, taxpayers have a tendency to abuse the privilege that they have of writing off those costs. And so over time, the IRS has created a list of properties that are, under certain circumstances, going to be subject to a different style of depreciation. In their infinite wisdom, the IRS calls that listed property. And it's property that's often subject to abuse by taxpayers, and one of the primary items of listed property is automobiles, because if you know anyone that has a company car, or you know of anyone that has a company car, it turns out they often do not use it just for business purposes. So one of the ways that they control this is there is a limit placed on the amount of depreciation you can deduct on a vehicle, whether it's used 100% for business or not. So the 2018 limits are quite high. They used to be much, much lower. If you go back in history, over the last decade, you often see lower limits when you have a Democratic president and higher limits when you have a Republican president, and this president is no different. So starting in 2018, you can see over here that the depreciation limit for the first tax year is $18,000. Then the second year is $16,000, the third year $96,000, and each succeeding year is $5,700, and that's for vehicles placed in service in 2018. For example, a vehicle placed in service in 2017 was subject to lower depreciation limits. 2016 the same, lower yet. And there is a little stub period after September 27th that the new tax law picked up. Okay, so let's say you placed a $70,000 auto in service in 2018, and you elect, of course, bonus depreciation. So what you'd like to do is write off the entire cost. However, you're only going to be able to recover $18,000 of that cost in the first tax year because depreciation is just simply limited. Okay, so what effect does that have, right? If we harken back to our Daniel and Toshland examples, we see that an auto is typically a 5-year property. It normally takes 5 years to depreciate an auto. In this case, a $70,000 auto, which is a pretty nice auto by most standards, it would take 8 years to run that off using the limitations that currently exist. Okay, so one last thing before we wrap up special depreciation, and this has to do with when we use property for business, but not 100% for business. And this changes the amount of depreciation we can take. So in this example, Yoda purchases a new auto for $60,000, and he uses that auto 80% for business. And so we apply 60,000 times 80%. So think of it as bifurcating the asset into its two parts: a business part, that's the 80%, and then the other 20% is personal use. And we're going to, again, take bonus depreciation, so we'd like to write off all 48,000, but we know that it's limited to 18,000. Well, when you use something, listed property, partially for business, you also have to apply the 80% to the limit as well. So the limit for year one would only be 14.4. And this business use percentage applies to any business property. Now, not the limits, of course, that only applies to listed property and specifically autos. But if you used a machine and you only used it 60% for business, you can only take 60% of its value as its depreciable value, and the rest of it is personal use and is, of course, therefore not depreciable. Well, that brings us to the end of video T7D on the special forms of depreciation. You can hopefully sense the tax advantages offered to businesses through the new tax law. Expanded Section 179, 100% bonus depreciation. Recall that the 100% bonus depreciation starts to fade in about 5 years. I guess we'll have to see whether or not Congress and the President in place in 5 years from now are still keen on this system. If not, you'll all be back to maker's depreciation from the previous video. I guess we'll all have to wait and see. Thanks for watching.